Hello and welcome to Stocks Advisor channel. Here at our channel, we're looking for interesting buy opportunities for US-based stocks. Today we will talk about the Microvast Holdings Incorporated, traded at Nasdaq, ticker name MVST. Well, MVST today made 17.94%, finishing at 13.74. After hours, we see some slight negative volatility, minus 0.58%. And the reason for this is actually very interesting pattern and actually overall last week action, previous trading week action. And the interesting situation here is we are actually making this U shape of recovery. If you look, let's make it a little bit bigger to understand what's happening here. We had very interesting finishing of the previous actually descending channel that started by almost, let's say, first part of July. After this dark candle, we had one and then accelerated decline. So it was classical accelerated negative channel formation, then strong volatility, bouncing in the area of 8, and then we see here a very strong push up and actually breaking out for both channels. If you would even continue the first one or the second, so both were broken. And today we see also incredible jump. The question is now, what is next from the overall technical point of view? Because what is important that you see after having on the previous two declining channels also classical double wave negative forming at MACD. Now we are up, so upwards MACD histogram wave may stop at any moment and start declining, because after trading so much and going RSI almost at 66, it means that there is a lot of people already sitting with a profit in the position, so they might start selling, and this will cause a normal, let's say, pullback, and overall still there is a room to grow. So it's a really very tricky situation, because this hesitance was already on the previous trading session. You see this dark candle. Okay, today it resolved with a plus, but there is a moving average 200 sitting here as kind of attractor for the price. So what might be happening? It might volatile here a bit and decline further. So this way it might make so-called W shape. So if this was the first, let's say, U formation, then it could go lower. So, and then again up. So if you would shift it a little bit to see it in the relation to the current price action, so that what might be forming here. And if this is indeed the case, if this is the situation we're going to have, we might observe, of course, a decline. But also what might be happening, we could just continue growing from here. So it could be either a W, or it could be just a stronger recovery, which is maybe less likely, less probable, but still could be, because we have here several very principal levels where the price still might go, and these are about 1741 in the area of let's say 20, and in the area of 25. So these are three levels where we still might go, and we need to be ready for both, and that will define our trading strategy. So first of all, let's say the primary expectation here is a W formation, but still the just U formation is also possible. So we need to take both into account in order to trade here, and that's how we will actually define our trading strategy and the level. So now let's talk about buying. Let's remove these drawings. And speaking of buying, first of all, if we still continue to grow, we want to be in time. Given the volatility of after hours, most probably we will be still having some volatility levels here, and that's why we still want to be in time to buy if we continue growing. So we will just buy within this channel with a smaller portion. This will be between 12.93 and actually 14.09. So this is just the first level in case we continue growing. If we even open higher tomorrow, most probably the downward shadow will pierce to this level and then go high. So we can buy therefore here, and then we can make our call out for buying. It will be 12.93 to 14.09. So the first, let's say, less probable, but still probable technical situation. That's the level. And those probabilities we will take into account when we will talk how to buy through those levels and how to mitigate the risks at the end of this video. And just speaking of profit, because the levels could be really high, I would say the profit taking could be very big. I always usually try not to go higher because then things might go really let's say uncontrolled. So up to 15 to 20% from the money allocated in the position would be just in time for short-term traders. If you're longer term, of course, you could go even up to 30-40% because we could face into the area, as I said, around 17.40 or even higher, 20 or 25. But if you're, let's say, just a quick trader, take and go and try another place, well, 15 to 20% from the money allocated in the position would be right here to do. Secondary pattern. So, well, secondary pattern would be, of course, if the first one is broken and we decline and we form kind of a W-shaped formation. Of course, we need to be in this area, in the vicinity of the current U bottom, because I don't think it will be skewed W. It will be most probably just a classical one. So we just want to be ready to buy here at these levels. And it will be, although a bit broader channel, but still, because also taking into account the volatilities we had here by end of July, beginning of August, this would be to area to aim at. It will be between 802 and 918 to buy. So here, this will be the second level, if it's a formation of W, and then we know that here we can buy, which I think would be the most probable, but you never know how the market reacts. That's why we have these two levels. And the third level, we always keep it for risk mitigation and kind of a negative catalyst, if any, coming. To be honest, I don't see at the moment any of those here because we were already at the very, very low, actually historical low for this ticker when we were in this secondary level. But just to keep it, and in these cases, we usually take a mathematical approach, we can just give it, let's say, another 20% decline just to have the third level. And that's why we can say the third level would be somewhere about with the top at 20%. So something like 647, 40 to buy. This is the level we do not expect. I always keep saying it because the third level we talk is so-called risk mitigation due to possible negative catalyst. And this is the level which is never expected. We don't know what might be happening. If this news comes, it could be news or sector or market related situation. But we want to keep some funds just to buy if a doomsday scenario takes place, because we never talk about stop loss at our channel. We always talk about non-linear averaging down and exiting either with a draw in the worst case scenario or with a profit, which is our primary target. So we are not about stop loss. And the difference between stop loss approach is that in the stop loss approach, you buy your time with money because you say, I do stop loss, but I want to try somewhere else. So money I spend, but I win the time. This is usually very good for those who trade in the daily, intraday, let's say, candles, like 15 1-minute candles. But if you are more relaxed player, which is what we do at our channel, like daily candles, then you just need to look at the principal levels. And this is the way of trading for those who trade either with huge amount of money or for those who seek for trading as a secondary source of income. So they use trading as a secondary source of income. Therefore, they don't have time to look at intraday. And that's why you don't want really to do stop loss, but you want to buy more on the principal levels and exit with a profit. So you have few days extra to trade, to wait, and you are not in that rush. And because usually these are the people who look for advice in YouTube for trading of stocks, this is the reason we choose this strategy. We don't do stop loss, but we do non-linear averaging down. And speaking of non-linear averaging down, what does it mean? It means that we buy with portions, because we don't know exactly if the first or secondary level will work immediately. Both are possible. That's why we buy with portions. And we usually choose different strategies. Here, the classical one is 5 portion, but because here the first level could be less probable, we do more safe approach. It's a 6 portion play. So what does it mean? It means that the money would like to play here. You can split in 6 portions. Then you can buy with 1 portion in the first level. If the price declines and we have a W-shaped formation, then you buy with another 2 portions through the second level, and then the remaining 3 portions you just keep as a risk mitigator, because we don't want to do stop loss. And this you buy with those 3 if you go to the third level, which is kind of catalyst-based decline, if any. So with this way, it would be the best optimization for profit versus loss. And again, the profit taking would be 15 to 20% from the money allocated in the position at any level. And I really ask you, take the profit when you can, when you are within the, let's say, target levels. Don't wait, because waiting too much can make your position expiring and actually will go to the losing instead of profiting. With this being said, that's all for MVST. If you like this way of trading, where we do non-linear averaging down for the principal levels without any stop loss, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.